Hi, welcome to this week's edition of the Las Vegas Real Estate Update. I'm Steve Hawks.
I'm Kendall Trotter.
Today we're going to cover the number one real estate question in Nevada. For homeowners, do you owe more than your home is worth? And what to do about it. Kendall?
In a lot of cases, the answer is yes. So we want to talk about your options.
Basically, 2004 or after, if they didn't put any money down, or 5% down, or even 10% down, they're going to be upside down in your house. The four options they have: they can rent it out,
If they need to move.
which is a short-term fix.
Right.
They can ask their lender to modify the loan package. There's two things they can do. They can ask them to reduce the payment, and if they reduce the payment, then also ask them to reduce the principal, because there's really no sense of reducing the principal if you're $200,000 upside down. Also ask them to reduce the principal, which some lenders are doing. It's still few and far between, but at least you'll have the peace of mind that you tried to do that. The third option is you can short sell your home, which means you sell it for obviously less than what you owe on the loan, and that's one of the things we do. We negotiate with the lender to take less. And the fourth option is the unfortunate option of foreclosure, which unfortunately some people don't have a choice due to the market, and the payments went up, the ARM adjusted, they can't afford the payment now, and they can't refi. So unfortunately, that is the other fourth option. And many homeowners are weighing the options now of, we're seeing the new phenomenon of mortgage walkers. They're weighing the options of, is it make economic sense for me to walk away or pay the mortgage for the next 5 to 10 years till get even some zip codes have dropped 50-60%. People shouldn't feel bad, or there's a lot of scenarios that have happened to cause this real estate market to plunge.
Yeah.
And a lot of people that owe, for example, $500,000 on their house, it's dropped to $250,000. Well, yeah,
you're not alone, for one thing.
Yeah, it's not alone. It's nothing that they made a bad decision. There's a lot of economic things that have happened, a lot of fraudulent loans that have caused this, the snowball to occur. A lot of predatory lending, people not knowing what these lenders were offering. Yeah, everybody signs on the dotted line, but they thought they were dealing with professionals. Right. And a lot of these professionals were forging documents, signing stuff that wasn't.
Not being so professional, basically.
Right. They were lying to their clients, and now that stuff is coming back. This is the repercussions of that.
Right. There's a lot of talk about 2 years, 2009, middle of 2009. All the big think tanks are saying 2009. I've even heard some people say, respected think tank people, okay, that by 2010 we could be in a housing shortage because of the way the builders have pulled back and our population's still growing. Even though that, I won't say there is a recession or there's not a recession. Every time you turn on the TV, you're hearing another story.
I'll say there's a recession.
It's in real estate, I would say, yeah, there's definitely a recession. But it's
the people have to weigh. If their home was $500,000, if you owe $500,000, and in 2010 we expect the market to level off, the house has to double
again
in order for you to break even. So a lot of people are making the decision, well, even if this does happen to my credit will be repaired in 2 to 3 years, hopefully. Credit repair companies, there's no factual data on that, but from what we've seen, 2 to 3 years your credit should be at par to buy another home. Another thing we have to look into is the only way lenders make money is by lending money. That's the only way. So if a large majority of people have a default or a foreclosure or a ding on their credit,
who are they going to loan money to?
Exactly. They're going to have to make an exception. In the past, this is a stigma where people, if they lost their house or were foreclosed on,
it wasn't very common in the past.
Correct.
Either.
Because a person must have done something wrong or didn't do. Now it's a whole different ball game. So in the future, when these lenders are doing these guidelines, they're going to have to be a little more flexible. Proof of this is my friend works at a car lot out here. 3 months ago, if somebody had a default on their credit, there was no way they could get a car. He couldn't finance them with the good financing. Now, if the default is on a secondary home, it's overlooked.
Really?
So in the future, they've already changed that lending guidelines on that particular section of the lending economy. So obviously, in the future, when people are buying homes, most likely the lenders are going to be a little more flexible on the guidelines. They're going to have to be.